Ladies and gentlemen, thank you for joining me. This is our weekend gold and silver market update. This is Christopher Aaron. There is a significant breakout in the price of gold that we have been following here on this channel, and that breakout is being confirmed this week. So that is some significant action that we'll be paying attention to. We're going to confirm that by looking at whether or not this phenomenon is a US dollar only phenomenon, or whether the move higher in gold is occurring in multiple world currencies, because that would be a much more powerful situation. I wanted to mention to everyone here quickly, I have another free channel. It's called iGold Power, and this is available for people who are interested in learning more about some of the more aggressive forms of investing that I do. I will have a link to that below. Just a warning, it gets a little bit into some boring math, but sometimes when you are looking to achieve life-altering gains, there is some boring math to do. So anyway, that is there for anyone who wants to see that. Understand where I come from for this channel. There are many people out there who are providing information to either convince you to buy gold or silver or not, and that is fine. I am a fundamentalist at heart. However, the problem with that form of analysis, on relying only on the fundamentals, we can see it very clearly over the last few years. For example, one could have said in 2011, 2012, there are problems with the central banking system. Currencies are losing value. Savings are losing value. And you would be correct on such a statement. However, the market can move opposite of that, as it has done for the last 5 years, and you can lose significant amounts of purchasing power. So what I do here for the bulk of my work is not to review those fundamentals, because there's a lot of people already doing that. I will provide that every once in a while when there's a noteworthy news item. But in general, what I focus on is the technicals. So the way to think about the technicals when we're looking at charts, when we're looking at graphs, think about an election. If there was an election going on and the two primary candidates were one a dictator and one a democratic candidate, and we say from a fundamental standpoint the democratic candidate should win, but let's say the market, being the sum of all people, disagree with us, we must pay attention to what the sum or the market says in order to prosper, in order to avoid loss, right? Because if we don't, and if there is a dictator elected and we choose to ignore the message of the sum of the market, we may have to flee the country. We may land up in jail. So the analogy here is that by paying attention to what the actual market is saying, we can align ourselves with it. We can profit more for ourselves, and so that we can use some of that profits to help others along the way. So that's what this channel is all about. And we'll be getting into that technical action now. So I turned off my video so I can focus mostly on the charts. And we're going to start by looking at a historic example of the price of gold so we can put this in a really good perspective, what I believe is happening right now. Here's the price of gold from the post-depression era in the United States through the present. And we're going to zoom in on this region here in the shaded box. So we are going to be looking at the period from 1935 roughly through 1980. Zoom that in. Now, the reason why I bring this time period up is we have a very interesting example here of what occurred to lead us to the present in the gold price. And there's a lot that we can draw from this to look at models for what will be happening going forward. There's often a fear of suppression in the gold price, and that central banks, for example, that have a monopoly on printing money are going to hold the gold price down by selling gold or by shorting contracts. Now, one of my fundamental beliefs is that all markets are stronger than any central bank attempts to suppress them. And we're going to look at this as an example of that. So we had, through the 1930s and the 1940s and the 50s and the 60s, an official price for 1 ounce of gold. The official price was set at $35. This was after the devaluation of the dollar in 1933 under President Roosevelt in the Great Depression. So the other way to think about an official price for gold would be to say a fixed price or a suppressed price. Anytime a government or an institution comes in and attempts to hold the price of any asset at a certain level, that is a fix. So let's look at this example to see what happens when governments attempt to hold the price of an asset down. So we're going to zoom in to the 1960 to 1970 period, and keep in mind that after this period, gold had over a 20-fold or 2,000% move. It's often said that Nixon in 1971 was forced to remove the dollar from gold backing. And it's actually not that Nixon was forced to do that. It's that the market made him. The market told Nixon, if you don't devalue the dollar, remove it from gold backing, we will. So zoom in here with me. Now, this is a time period that most people gloss over. Mind you, the official price of gold during this entire time period is still roughly $35 an ounce. After the Vietnam War, during the unsustainable debt burden that the United States was taking on, guns and butter, as it is often referred to, with military and social spending. And this is not to get into politics, but it's to lay the backdrop for this. Notice these two areas that I'm indicating with the red arrows. What happened here? The United States was officially holding the price of gold at $35 an ounce, yet the price of gold began to rise in 1967 through 1968. Imagine that. There is an official price. International reserves are being traded at this official price, but the market overrides this price. Why was that happening? Because the United States was printing more dollars than it had gold for. So the market could not be held back. And this was a very important, these two warning signals here were very important signals for anyone who was paying attention in the late 60s, that something was up in the gold market. The market was breaking the central bank gold price control. So why do I bring this example up? When we zoom this back out, because when we see a long period of stagnation, a long period of flat prices, and then notice how on this long-term chart, this bump here looks very small. But when we were looking at the last chart, that was a significant rise compared to the official price. And this was a warning signal that something very significant, was about to happen to the price of gold. Central banks cannot control the price of gold over the long run, nor can they control any currency nor any asset. I reject that hypothesis. It's a defeatist hypothesis. We can profit from the rise in gold if we time our purchases correctly for ourselves and for others. So the analogy that I'm drawing here is between the market that had a very significant multi-decade, 29-year period that it remained below $850 an ounce, and then we had a 2.5-year move above that level. Markets that consolidate for 29 years do not finish with a 2.5-year move above that level. So we are currently coming back into the vicinity of that level, and we are noticing here on the intermediate term blue trend this break of the trend. So what is getting ready to happen here as we look at this as a generational warning signal? This spike that we saw from 2009 to 2011 was not an isolated event. It was a warning signal for something to come over the course of the next decade. Zooming this in, we have some new charts to look at here for gold. What is actually happening in the market right now? We have our primary blue downtrend here that was just broken. We had a $50 move higher in the price of gold on Thursday, over $50. By my calculations, that was the 7th highest move higher in percentage terms of gold in the modern era. So absolutely a significant move higher. And we can see breaking out of this downtrend that we were looking at. Now, let's zoom this in. 2.5 years. Here was the chart that we were looking at for the better part of the last 6 months. If you've been with this channel, we were all over these lows like butter on toast. And coming out of these lows, we've had this significant move higher. Now, this chart ended a few days ago, and I want to show you why. This is how these charts are changed as we go forward. This chart that you came to know and perhaps love so well is no more. In its place, we have the new version. So colors have been changed. My key stays the same for every chart that I do, so you can become familiar. This is designed to draw your eyes to the important trends, the important points on the trends. So where we once had a trend, we now have a broken downtrend, shown here very clearly by the red circle. We have now moved above this declining 2.5-year back and forth downtrend. So we have a new higher high than the October high, another signal that the gold market has most likely formed its long-term bottom. Now, could something change, and could perhaps gold even move lower than 1045? Nothing is 100%. I would argue that in life, nothing is 100%. So no form of analysis is going to give us a 100% certainty. However, this is a very strong signal that this market has broken its downtrend. And after a broken downtrend, we have at the very least what is going to be a consolidation. And typically after that, you will begin a new uptrend. So I'm working on my models right now. I have two models that I'm studying. One is based on the 1970s model, and another is going to be based more closely on some of the resistance levels that we have here for gold going forward. I'm working on that now. I will bring you that in the next update. For now, this is the line that we must pay attention to. Gold is due for a sharp pullback. At any point, you could see a $50 or a $75 move lower on gold here over the course of a day or two. When you have a market that is moving almost straight up like this, it will almost always form a top and then revert for part of that. So as a technical analyst, the level that I want to see hold is basically the confluence of this 1190 former resistance level that was broken and this downtrend that was broken. So somewhere in this 1220 to 1190, I would like to see that hold. If that doesn't hold, we have to take a step back and look at this as perhaps a false breakout and something that needs to base for a longer period of time back in the channel. I don't see any evidence for that yet. That's just to let you know. We're going to do a quick around the world for everyone in Europe, Australia, Canada, Great Britain, and everywhere else. This market is not simply moving in US dollar terms. Now, if you go back and you watch some of the videos from about 6 weeks ago, I was bringing up all these charts and saying that there were important battles, there were important trend lines that were going to be decided one way or another across all these markets. So we're looking at gold in euros. And notice this long-term magenta colored trend line held, and we have broken the downtrend in euros, currently right around 1100 euros. Zooming that in, we can see very clearly. Here was where I was saying the final battle will occur, and sure enough, right before that, we broke out to the upside. Nice confirmation for gold in euros. Looking at gold in British pounds, a similar situation, breaking through this 5-year downtrend and currently surging to above 850 British pounds. Zooming that in for a closer look, we can see that break right there. Hitting an important secondary resistance level right now. That's okay. The important thing that we're noting here is the break of the downtrends. Switching to gold in Canadian dollars, we had already broken this downtrend when we last looked at it, and I said if this long-term magenta trend line is going to hold, we will look for a rise to the top of the trend line. There we are in green, and we zoom that in, and we can see that nice, beautiful trend line that we are holding right now. Gold, as priced in Canadian dollars, is only $150 below its all-time high. The idea that this is a bear market is laughable at this point. Switching to Australian dollars, the final currency we will look at. Slightly different situation here due to the intricacies of the Australian dollar. We had broken the long-term uptrend line only to come back again and reestablish a base and now break through this 5-year downtrend line as well. Currently right in between these two broken trend lines. So this will be very interesting to watch. But as we zoom this in, we can also see that gold in Australian dollars is only 10 or 15% below its all-time high. So in summary, we have a lot of confirming data here that gold has a legitimate breakout. Multiple currencies We are also watching the mining sector, and this is what we get into more in the iGold Power. 65% higher in 3 weeks. That is an impulsive move higher. It will not keep going straight up like that. So don't feel like you missed the entire move, but there is a generational low forming in this sector by all of the valuation metrics that I look at. So that's another piece of data. I'm working on my models for gold higher. I will bring that to you next time. We should expect this sharp correction at any time. Don't let it scare you unless this support level fails. I think it's going to hold. In silver, we have no change in the trajectory, so I did not want to repeat myself, but we will look at silver in depth on Wednesday. I like to try to keep these presentations to a reasonable length. Thank you again for being with me. The next update will be on Wednesday. Have a lovely Sunday evening, and it's nice to be able to follow these markets together.